Hey there, and welcome. If you've ever felt like investing in the stock market is some secret code, something just for Wall Street wizards, then this is for you. Today we're going to pull back the curtain and show you that successful investing really doesn't have to be that complicated. Let's dive in. It's a fair question, right? We are constantly bombarded with these flashing charts, all this crazy jargon, and so-called gurus on the internet promising to make you rich overnight. It's so easy to feel completely overwhelmed and just assume that if you're not some kind of financial genius, you have no business even trying. But what if that's just not true? So let's start with the approach that most of us think of when we hear stock market. This is kind of the Hollywood version, The thrilling, high-stakes hunt to find that one company, that needle in a haystack that's about to explode in value.
On the surface, it sounds so straightforward. Just find an amazing company before anyone else does, buy up its stock, and then sell it when the price goes to the moon. But here's the thing. While that idea is super easy to grasp, the reality is it's a high-stress game that almost nobody wins consistently.
And this right here, this is the real cost of trying to pick individual stocks. This isn't just a hobby, it's a full-time job. It demands endless, grinding research, constantly watching the markets, and, an almost superhuman ability to predict the future. And on top of all that, you need the emotional strength not to completely freak out when things inevitably go wrong.
And that brings us to what is, for most people, the biggest hurdle in investing. It's not the complicated charts, it's not the tough research. The single biggest obstacle standing between you and your financial goals is your own brain.
Meet the two puppet masters of bad investment decisions, fear and greed. Greed is that little voice that tells you to jump on a hot stock after it's already shot up in price, which means you're usually buying at the very peak. And then, when the market does what it does and dips, fear grabs the controls, screaming at you to sell at the worst possible time, locking in your losses for good.
And this is the cycle that traps so many investors. You hear the hype, you get swept up in the euphoria, and you buy high. Then, you see the red numbers, you panic, and you sell low. It is the exact opposite of buy low, sell high, and it happens because we let our emotions call the shots.
So, what if you could just take all of that stress, all of that guesswork, and pretty much all that emotional chaos, and just set it aside? What if there was a path that didn't require you to be a market genius?
Well, that brings us to a totally different approach. Welcome to the world of passive investing, a strategy so simple and so powerful that it almost feels like you're cheating. The big idea is to stop trying to beat the market and instead, just own the market.
The philosophy here is just beautifully simple. Instead of placing these risky bets on individual companies, you own a tiny little piece of thousands of companies, all at once. You just accept the market's average return, which, by the way, over the long run, has historically been an incredible engine for building wealth.
This analogy absolutely nails it. Why would you spend all your time and energy digging around, desperately searching for that one magic needle, when you can just buy the entire haystack? You are guaranteed to own all the winners, simply because you own everything. So how do you actually buy the haystack? Well, a really common way is with a simple 3-fund portfolio, just like this. You own one fund that tracks the entire US stock market, another that tracks pretty much all the international stock markets, and a third one that holds bonds. Now, bonds are basically just loans, and they tend to be way less bumpy than stocks, which gives your portfolio a little stability when the market gets turbulent. Okay, so we've got two very different ways of thinking, both trying to get to the same goal, growing your wealth. So let's put them side by side and see how they really stack up.
The comparison is pretty stark, isn't it? Stock picking is incredibly demanding. In your time, in its complexity, in the stress it causes, all for the ridiculously difficult goal of beating the market. And the data shows just how hard that is. Year after year, the vast majority of professional money managers fail to do it. The 3-fund portfolio is the complete opposite. Minimal time, minimal stress, with the very simple goal of just being the market.
And this really gets right to the heart of the matter. We're often taught that complicated problems need complicated solutions. But with investing, the opposite is usually true. Simple, disciplined plan that you can actually stick with is so much more powerful than some brilliant, complex strategy that you ditch at the first sign of trouble.
All right, let's bring it all home. If you forget everything else from this explainer, I want you to remember these key ideas.
First up, the biggest danger to your portfolio isn't a market crash, it's you. Getting a handle on your emotions is everything. Second, please don't confuse complexity with being smart. A clear, simple plan is easier to understand and, more importantly, easier to stick with. And finally, learn to embrace the boredom. Successful, long-term investing should feel about as exciting as watching paint dry. If you want a roller coaster, go to an amusement park. Your portfolio is for building a secure future.
And I'll just leave you with this final thought to chew on. The world of investing wants you to think you have to be a genius to win, but maybe, just maybe, the real genius is in recognizing that you don't have to be. Sometimes, the absolute smartest move you can make is to just embrace simplicity.